Hey, check mic 2 1 2. Let's see if we are online. Yeah, great. So I'm very glad to see you all. Actually, that's a lot of you coming today, waiting for me to talk about the new subscription plan and some trading tips as well, and many things to discuss actually. The market is green, which is just perfect, and that's something that we will cover today as well. And depending on your risk appetite, we will cover different strategies and how you can maximize your returns on the market rally that we see now, and how to minimize the loss if you think that the market is going to plunge. And also we'll talk about the diversification and some of the features that you can use on Bitsgap to further improve your risk management. So first of all, let's check the chat activity. Okay, great. Yeah, let's just wait for the rest to hop in this webcast. All right, so once again, greetings. And for those of you who don't know me, my name is Dmitri. I am the portfolio manager, trader, and I'm here for you guys to share my experience, to share with you my wisdom, and to show you some use cases that you can use to formulate your own trading thesis and come up with your own trading strategy based on the tips and clues that I will share with you. And today specifically, I will cover some updates we made with the subscription plans. So as you now know, there are no trading limits, and now the value proposition of Bitsgap is based on the features that you can get depending on your subscription plan. So the current version of the basic plan is basically an ultimate solution for those who are consider themselves to be at the beginner level of trading. And if you want to learn about Bitsgap and its functionality and how you can diversify your portfolio with automated bots and smart trading, well, in that case, the basic subscription is the solution for you at start. And once you dig into the platform's functionality, you will realize that eventually you want to have more automated bots, and you want to have more features to maximize your returns and minimize your risk potentially. And in that case, you would consider the next subscription plan, which is the advanced one, and it comes with 5 active grid and future bots backed by trading up and trading down features. So this plan is most suitable if you want to kind of diversify your trading strategy and generate steady passive income. Well, I would say semi-passive income from your investments. Okay, and of course the Pro subscription is now not limited to 15 bots, but you can now have up to 20 bots. So for example, in my case, I now have 14 out of 20 bots trading for me with a total value of $11,200 locked in these trading strategies. and so far it's been doing just great. So far $2,700 just in pure bot profit. And I mean, that's profit you see now. 2,700 is the total sum that I already possess. It's on my balance and I can use it, let's say, to launch new automated bots, or maybe to use it in smart trading, or maybe for some other purposes, like for example locked DeFi staking to generate passive yield by just providing liquidity in the pool. All right, so that's like one way for you also to consider diversification. But yeah, I mean, I would say that automated bots, they account for around 50% of my entire balance. I would say, well, actually portfolio in that case. And that's because of the value proposition you get from automated bots, because they generate returns on a daily basis, okay? And you have all the features to minimize the potential risk by having features like stop loss, take profit. You now even have the trading down, which basically allows you to increase your investment and expand your trading range. For example, you see now algo to USDT on my chart, and my trading down is below the trading range. So that means if the price breaks the lowest limit buy order that you see on the chart now, in that case it will automatically open new limit buy orders right below this lowest limit buy, and down until the stop trading down. So with this trading down, you just basically extend your trading range. If you feel like the initial trading range is not sufficient and it makes sense for you to extend it, then yeah, trading down is a perfect solution. But keep in mind that by using trading down, you increase the overall market exposure, because you inflow more money into the bot, and the bot is going to use this quote currency to buy more of the base currency. So that way you kind of increase your risk exposure to the base currency. So the bad side effect of this is that if the market continues the plunge, then you end up having an increased exposure relative to the exposure you had without using the trading down. So that's the trade-off here, always to keep in mind. With the trading up, basically I would say it's in my case, I always make sure that I have trading up feature on, because basically it enables my bot to move the whole grid setup, well, the trading range in other words, with the price rally. So when the price is rising, then thanks to the trading up, the bot is able to move my trading range accordingly, so that I am always in the market, and the bot can capture all of these minor price swings that you can find on the road to new all-time highs. So if you zoom out my chart here, let's say algo, yeah, so you would see that initial trading range was set from actually it's not anymore like that. Yeah, so it was around 0.8 or something up to 0.9. That was my initial trading range. Okay, and now thanks to trading up, it's trading even higher, and it managed to capture all of this price action from $0.8 up to $2.50. I mean, that's an insane rally, and trading up is the tool you need to use if you feel like the market is gonna go higher exponentially and you want the bot to capture all of this price action. Then trading up is definitely that you should consider something. And yeah, that way you are pretty much always in the market and you don't need to monitor trading activity every single day. It just literally, for me, it takes 3 days per week to, well, spend like 20 minutes or something just to check the activity of my current bots, make some adjustments if needed, maybe to set take profit, or maybe to set the trailing down if I feel like the price can plunge and my trading range is not in the optimal range now, so I can maybe extend it using the trading down. Sometimes I just close bots and switch them to new strategies, like for example, maybe it's no longer the case for the ASBot to generate me return, because ASBot is the optimal solution for the sideways market. It's when the market moves in the horizontal trading range like this. So that's what we call a sideways market. It's kind of delta neutral, you would say. So it's kind of somewhere always in between. And the best way to capture this market phase is using the ASBot. But if it's no longer the case for, I mean, if sideways market has ended and now we are seeing a rally, then it makes sense to switch to the classic bot, because we know that classic bot is the one specifically designed for the rising market, because it just captures more value from the market exposure on the rally. Because when the price is rising, it substantially increases your risk, market exposure, essentially, compared with the ASBot. And that's due to the investment distribution logic, which is implemented in both the ASBot and the classic bot. It's just different in case of the ASBot and the classic bot. So that's why ASBot is the ultimate solution to accumulate more base currency on a sideways and on a falling market, because it just buys more of the base currency. Whereas classic bot is the ultimate solution on a rising market, because it accumulates more on the rising market, and that way you have a bigger exposure and that way you generate more money. So that's like what distinguishes ASBot from the classic bot. It's just really about the market scenarios, and whenever you see the sideways or falling market, that's the ASBot. When it's rising, then that's the classic bot. But if you are, let's say, complete newbie in trading with automated bots, then I would recommend to start with the ASBot, because that way you can capture all falling market, sideways market, and even generate money on the rising market. It's just that you would sleep better knowing that, well, since you don't have enough experience to distinguish ASBot from classic bot and see the market cases for the classic and the ASBot at least would let you sleep well, because you know that even if the market falls, then ASBot will minimize the loss on the falling market because of its dollar cost averaging effect and the way it distributes your investments proportionately. So in my case, we're doing just great, except for the OXT and the MKR coin. So you see the status for my maker coin is range, which means that my trading range is out of the price action. And actually, if you zoom out the chart a bit, you would see that it looks like, for me, it really makes sense to extend my trading range down to the price of well, around $2,100, because we saw multiple times how the price has bounced off this support line. And in my case, I just it really makes sense to extend the trading range, but keep in mind that in that case you need to allocate more money. So I would just click on modify, and I would, oh yeah, so I cannot do this for the MKR, I forgot, because that's the classic bot, and for the classic bot we don't have the trailing down yet. Okay, so you can only have trailing down on the S bot. So in that case, yeah, now I remember why I don't have my trading range below. It's because of the lack of trading down feature on my classic bot. But let's say OXT, yeah, the same case for the OXT. That's my classic bot. So, but it looks okay. I mean, the trading range is still fine, and it seems like the price is gonna bounce off this area. So it's, yeah, looks okay as of now, even though the overall performance is -6%. I still have my bot making me some money. It's so far $54. So if not the profit that was generated by the bot, then my overall performance would be worse, and we can even see this. So it would be -$100, whereas thanks to the bot it's just -$60. Okay, so that's how you create the value from bots, because they literally minimize the risk in case of the falling market, and that's exactly what you see. And you can always compare different scenarios. So in that case, initial funds, it would be -10%, and what you see here is basically what would be the simple hodl performance. Okay, if you would just hold OXT worth 1,800 OXTs on your balance and 300 USDT, and that way, yeah, the value change would be -$100. Okay, whereas thanks to the bot, is it been buying low, selling high, and always changing the balance between the base currency and the quote currency in the bot strategy. It managed to achieve a better result, and that way save me $40. Okay, so that's very good. So that's an obvious effect of the bot. And actually, if I would use as bot on OXT with the same parameters, then the performance would be even better, because on the falling market as bot is acting way better. Well, in most cases. It also depends on the volatility and how often it surges and plunges, and that way creates this mini trade opportunities for the bot. Yeah, because if it heavily goes down like this, one candle just simply down, I mean, that's a huge risk out there. But if the market is falling, but it's falling smoothly like this, so it still provides you some window for selling low and then, sorry, buying low and then selling high, then that's a good, that's a better falling market compared with the one where you see one candle -10% in 1 hour. Okay, so it, yeah, really case by case. But in general, as a rule of thumb, as bot is better when it comes to risk minimization effect. Okay, yeah, let's see what are the best performers now, and maybe look into the configuration specification. So as I told you, the grid setup that I usually use for the ASBot is from 0.8% up to 1.5%. And the way I decide which grid step to choose, it just depends on the coin and its volatility. So for the algo, I found that 0.679% of a grid step is, in my case, the ultimate solution, okay? And it has proven to be successful. So it's around 60 something % per month, which is a very impressive result, which is like 2% daily. So I'm satisfied with this outcome, 2% per day with this configuration. I would say that's a proven I would say it's a stress tested configuration, and I would stick with this configuration for Alga coin for some time in the future. And if I see that the volatility changes on Alga, then I would probably consider using other parameters and maybe minimizing the grid step and maybe having more grid levels in that case. So the next, like the second one which was acting good, is Solana. And on Solana I have 1% per day, and that's, you see, the maximum grid step that I usually afford is 1.85 in that case. So it's slightly above from the usual range that I use, which is from 0.8% to 1.5%. But still I have 20 grid levels here. Of course, trading up instrument enabled. Actually, I would consider setting a trading down for it down here. Yep, and I would click on preview, confirm. Here we go. So in case if the price falls back to this price level, I know that my bot is gonna continue trading here, which was not the case before when the price was below 140 and I didn't have a chance to capture this whole price action over here, okay? Because that's I would say an unexplored area for Solana, and that's why it was really hard to define the support line here. So, and turns out it was slightly lower. So if this kind of scenario happens again, then I would at least expect it to fall down to that point. So here I have my trading down now, and it will manage to buy Solana on this price level, okay? So and maybe the third one, that's the dot coin in that case. And yep, doing just, I would say just doing okay. Maybe with a lower grid step it would make more money, okay? But I mean, you can never know for sure what is the volatility in the next week or month, and because we know that volatility is the only underlying pretty much that defines the success of your strategy. Because if you manage to create this configuration for a particular volatility, and this volatility sustains for a long period of time, then you can play with this same configuration for a long time. But when the volatility is changing, like for example here, you see the volatility over this period, it's a completely different story compared with the volatility we have here, okay? So here it was just going up, okay, without any big corrections, whereas now we had several corrections, and that's why the volatility has considerably changed. And yeah, that way you should always monitor the market and see if it still makes sense to stick with the initial configuration, or it maybe now makes sense for you to change the configuration, okay? Usually the way you define your configuration is by using the back test, okay? So let's see, start new bot as bot maybe, and let's on algo. Let's set here, and let's this time try maybe around 50 grid levels, whatever. Let's say $1,000. Well, it actually doesn't matter what's the investment because it takes it out of the statistical analysis. It just shows you the bot profit for this period. So with the configuration where I have 0.99% of the grid step and 50 grid levels, the result would be 33% per month. Okay, and let's check my case. So in my case it was higher. It was around 60% actually. No, actually I can be wrong because I don't remember what was the final outcome of the first month. Okay, I don't really remember, so I just assume that if I divide this bot profit by 2 because I had 2 months, then it's well around 65% or something. I don't actually remember what was the final outcome of the first month, though maybe I'm wrong. So it's maybe not a 65 to 65% split. Maybe it's a different story. Maybe I made let's say 80% for first month and then the rest 50%. So that way it's not the same outcome, okay, as I would assume it to be. But yeah, as of now, backtest is like the ultimate tool you can use to kind of stress test different configurations. So let's say you feel like the market for algo is gonna continue this same pattern and it's gonna move pretty much same way, heavily up and then slightly going down, heavily down, a bit up, moving here and here. So if you anticipate this kind of performance for the next month, then try to play with this trading range here and define the ultimate solution that would bring you the most money. So we learned that it's 33% with the grid step of 1%. So let's see if we have only 20 grid levels. Backtest, you say it would be 35% in that case, so which is even better. Okay, slightly better, but still better. And maybe let's say we want to have 150 grid levels. Backtest. So yeah, in that case it would be only 26%. So that's how I usually use the backtest. And from what we just tested, turns out that the lower grid step, sorry, the larger grid step is better for this one. So what was this, 20? I don't remember, I think it was 20. So yeah, it's around 35. Maybe let's check just 30 grid levels. Yeah, so you say 20 was the best, pretty much. Maybe, okay, 24, whatever. No, so you see 20 looks like the best outcome here. I would not set even fewer grid levels because, well, even though you have this kind of the same expectation based on this trading range here, I mean, sorry, this volatility you had last month, you always need to have this input of uncertainty. So even though you anticipate pretty much the same price action you had this month, leave some space for uncertainty. So in order to capture this uncertainty, I would stick with at least 20 grid levels, because that way I feel like I have enough grid levels on this trading range. Because if I would have only, let's say, 5 grid levels, look, that's insanely huge grid step. And what if the price of algo moves like this? So you see, it actually never captures those lower and higher grid levels that you set. So it literally usually makes sense to have at least 20 grid levels from my practical experience. So we learned that you use the backtest, you check different configurations. If you find the best one and you feel like the market is going to continue the same pattern, well, pretty much the same pattern next month, then 20 grid levels in that case is the optimal solution. Okay, so stick with this. But if you feel like the market is going to move in a lower trading range, like this, for example, boom, 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 then now it's time to stress test this trading range. Let's say with the same, okay, so it would be 41% here, but what about 50 grid levels? 36, and what about maybe 140 grid levels? So yeah, you see kind of the outcome with 20, was it 20? Maybe 30. So yeah, 20 grid levels looks like optimal one for this trading range as well. So that's basically how I use it. But I never, I mean, backtesting is just like 15% of my overall analysis. I never focus on just backtest results, because I know that, well, it rarely repeats the same performance it did last month. So it's just that it's all about the practice. And you see, in most of my active strategies I have 20 grid levels, and those top performers, you see Algo 20, that it's the top performer because, well, 20. Solana 20, top performer. Dot 30, it's top performer. Okay, whereas here you see I have 50, 32, 45, 62. So they are my least performing strategies, and well, also because they are some are the classic bot, some are the as bot. But as a rule of thumb, you see 20, like from 20 to 30, that has proven to be, for me, for the last 4 months, has proven to be the ultimate grid setup for my bots. Okay. Yep. So that's pretty much all about the configurations that I use, and I stick with them as of now. Maybe I will, of course, change this combination later, because the market matures, volatility changes, I flip coins, I flip SBot to classic bot, and from classic bot to SBot, depending on market scenarios. So yeah, I mean, it still requires you to memorize some key metrics that you use. Most of them you can always find in the history or here in the configurations and everything. But yeah, I just remember that my key range is from 0.8% for the grid step to 1.5%, and usually that implies having from 20 to, well, 30 grid levels in general to achieve this performance that I have for Algo, Solana, Dot, Bitcoin. Yep. Now Bitcoin actually is out of this research, because that's a different story. It's 4% here, and Bitcoin here I used a completely different strategy, because that was a market plunge. I just wanted to use my SBot to buy the dip. So at the time when I launched the bot over here, it had only buy orders, so it had 0 sell orders. It was just the configuration I set specifically for the market plunge, anticipating it to bounce off the support line here and then to trade all the way here. So that's why it was that configuration back then, which is no longer, by the way, an optimal one in my opinion. But yeah, I'm still holding this because I want to use it as a use case for you, just to show you that you need to reconsider your active strategies and flip them to new ones with better configurations in accordance with the new market realities and conditions out there. Okay, so if we look at the market now, you would see that it's green. Okay, so Bitcoin 54, which is just great. BNB, Ethereum, so everything looks great as of now. Well, there are different reasons for that. I don't want to dig into this fundamental research because that's not the format of our webcast, but I can just share some insights. Well, it's not the insights, but rather some key takeaways from the market. So first of all, the mean hash rate, okay, it finally surpassed 150. So basically that shows the mining efficiency recovery. So this whole migration from China is going well, and it's never been how to say, so what was happening in China for like the last 5 months, it did create some turmoil on the market for sure in the short term, but in long term it never really flipped the whole narrative. Okay, it's just that, yeah, some other countries, they're gonna adopt new emerging trends, and that's why we see this whole migration. And of course during this migration we had this plunge in the hash rate and everything, so that's why recovery was inevitable in that case, and that's exactly what we see now, which is good for the network. And the other one is basically the how to say, it's the premium between the spot and future prices. So it usually was that on derivatives. If you guys know what derivatives is basically where you can trade options and perpetual contracts on Bitcoin and some other key assets like Ethereum. It's usually been trading on premium from the spot, okay, and it's been higher than on the Chicago Mercantile Exchange. That's basically the one you have, the only one you have for the US big investors out there. And now this whole narrative changed, and you can see that it's no longer derivative defining this no, actually leading this whole premium on futures, but it's now the actually CME. Okay, so something interesting might be happening there behind the curtains, and I think it has something to do with the ETF. Okay, because we know that there are around like 7 ETFs now to be either rejected or accepted in late October, beginning November. So it seems like the market knows something, and that's why in the US we have this premium now above the derivative, which kind of tells us that there is a, I would say, insider trading or something. So, well, something with ETF is well, might happen. The positive thing might happen in the next coming weeks. So it's not a financial advice, it's just that we monitor some on-chain data, and sometimes it can tell us more about the current affairs there than just reading news and everything. Okay, so the data suggests that yeah, the US is waiting something from the ETF, and I think it's gonna be something we've been all waiting for the last 3 years, for the ETF to be approved, but who knows. Okay, but anyway, that's just something I wanted to show you to kind of provide you more tools that you can use to extend your research scope. Okay, so in crypto, it's not just about having some moving averages plotted on the chart and then maybe, I don't know, volume profile and maybe RSI indicators, or maybe Ishimoku Cloud, wherever. I mean, they can be useful for sure, but not forget about the on-chain analytics, which is like the next level of research, and it should be taken into account. And yeah, it basically will show you the network fundamentals that sometimes can tell you even more than just an ordinary fundamental news research or technical analysis. Okay, so the way money flows in crypto space can tell you sometimes more than just what you get from an ordinary traditional analysis. So yeah, grab some of the on-chain tools and use them to improve your research skills. Yeah, there are different platforms where you can have on-chain analysis, or you can even find some on-chain data analysts on Twitter instead of using on-chain platforms on your own. It can save time for you sometimes. But anyway, yeah, that's what we have with the bots as of now. Recently just added Polygon, because I believe that Polygon is going to be the ultimate layer 2 solution for the gaming market. So if you know Axie, which is like the biggest game now, and it has this play to earn model, which I think is gonna be big. So Polygon looks like the choice of most of these play to earn games. And if you feel like the play to earn gaming model is gonna be one of the next crypto waves, then well, I would say Matic might capture this whole market wave. So that's why I have it in my portfolio now. But of course, it's not a financial advice or whatsoever. It's just I'm providing reasoning for my coin choice, and that's why I have Matic in my portfolio now. Of course, automated bots, it's not like, okay, for me it's the central foundation of my whole trading strategy, but of course I use an ordinary smart trading mode where you just trade coins manually, and here you can just buy some coins to add in your portfolio. That's something I think that I made for Injective protocol yesterday, and let's see how it's doing. By the way, okay, it's rising, which is great. And also I think I purchased some Compound. So even though there was a huge scandal around the Compound, well, fundamentally I don't really think that it has changed the narrative for Compound, and I think they're still gonna deliver what they promised to deliver, and that they have proven to deliver. So, and it looks like a market discount for Compound due to this short-term problem they are dealing with now. So that's why I added Compound. Again, not a financial advice, just providing reasoning here. And yeah, that's how you basically trade, and you set the limit buy order. If you anticipate the price to fall, let's say down to that support level here, 210, well, around this price level, so you can set the limit buy here, and you can buy in 10%, let's say, at that price, 210, 10%. It would be, in my case, $900. And if the price reaches this price level, it's gonna automatically buy 4.3 Compound coins at this price. Okay. You can use the stop limit, for example. That's a different story. So for example, let's say you consider two scenarios. The first one is possibly the price can fall down to this support level, $210 approximately, or it can revert now and continue its rally up to 520. So, and you say that, okay, if it breaks this line here, let's make it yellow. If you see the price breaking this line here, then assuming that you feel like it's going to continue the downfall, this is where you can use the stop limit buy order. Okay, so you need to set the trigger price, which is in that case 280 something. So you know that if it reaches 280, then this would be the condition to trigger the limit buy order at the price of 210. Conversely, you can set another stop limit buy order, but only, let's say, if the price breaks 350. So if it breaks 350, okay, maybe 360, then you want to buy at 355, let's say, same 10%. Okay, so the logic is simple. It's just based on your anticipation of either the price breaks this support line or it breaks this local resistance, and that's a completely different story in that case. Okay, you still want to buy compound, it's just that you are waiting for either of the two scenarios to get triggered, and depending on which scenario is triggered, it's gonna fill either this order at the price of 355 or the one we wanted to set at $210. Okay, so that's how you can use stop limit buy order, especially when you have a limited available balance and you still want to consider different scenarios. So that's the case for you. Yep. So what else would be interesting to talk about here? TVAP, not maybe for this one, but let's go back to bots and let's go back to Combobot. Okay, so you guys are familiar with the Combobot we have for the futures market. It's kind of a combination of the DCA orders, the dollar cost averaging orders, and the grid orders. So that's why you have two calculations for the DCA orders. That's the amount to be allocated, and that's the amount for the grid orders. 1,300 matics in total. And you can trade in two directions. If you feel like the market is going to rise, you can long it. And you can long it with the leverage. Usually you use leverage if you want to have more coins to make more money on this rally, but you cannot afford it because you don't have that investment capacity to absorb this whole volume you want to get. And that's why you need to kind of borrow some extra funds, and that's why you use the leverage. And the more leverage you use, the more you can borrow, but the more you borrow, the bigger is the cost. And sometimes if you don't have enough money to cover this whole trade as a collateral, then your liquidation price will be very tightly close to your entry price. So that's something that can kind of wash you out from the market real quick if it starts, instead of moving in the direction you anticipated, it kind of moves in the wrong direction at first, but still then moves in the direction you initially planned. But due to the fact that you have a very tight liquidation price, you are out of the market. So you need to take all these things into account and to make sure that you have enough of the spread between the entry price and the liquidation price. So these are some mechanics you need to understand in order to not just calculate the level of risk, but to also provide enough of the space for the bot to trade. Okay, and of course you can also trade on the falling market. On the falling market you can make money because that's the short selling narrative here. And with the short selling, basically the way it works is kind of, well, you kind of borrow money now, like all the coins you want to have, you borrow them now, and assuming that you sell them at the current price and anticipating the price to fall, so that later when it's now cheaper, you buy back same amount of coins you borrowed initially here and you just give it back. Okay, so that's the profit you make, okay, from the price difference. And that's like the implied short selling mechanism, but it works slightly different, but I just use this explanation to kind of show you the nature of short selling. Okay, it's just basically you borrow coins you wanted to have in the capacity you wanted to have, you sell them, well, now, and if the price falls, you buy them back and give it back. All good, you made money. The one who borrowed you loaned you, he gets money back plus the interest. Okay, but if the price moves in the opposite direction, if it appreciates, then you need to buy back from the market, but now at the higher price, and that means you are in loss. Okay, so that's pretty much the nature of short selling, and short selling is a very good instrument to kind of hedge against the falling market. And the way I use it is I look at my portfolio and see my current allocation, and if I see that more than, so okay, 33% in USDT, I think I also have some USDC, so that's another 3%, so now it's around 36%, and yeah, okay, plus this stable coin, so around 40%. That's my current stable coin allocation. So that means that I'm in the market by 60%. So I know that around 50% of this total exposure is in the automated bots. So I would assume that only 30% are not protected by automated bots. I mean, those coins that just on my portfolio and they are not in my automated bots or not protected by take profit or stop loss here, then I would assume that 30% of my total portfolio is at the highest risk. So that's why I would go to bots, and I would open a short sell position of this exact 30% value to mitigate the risk in case of the falling market. Because when it's gonna fall, it's gonna make me money to offset this loss that I am having now on my 30% of those unprotected coins in my spot portfolio. Okay, so that's the logic you can use with bots, and how you can use short selling bot to kind of hedge against the falling market. But for that you need to understand what's the exact percentage of your entire portfolio is at risk. Okay, because if they are in automated bots, then the risk is limited, because you know that your investments are spread over multiple grid levels. It achieves dollar cost averaging effect on the falling market, so it's kind of protected pretty much, and most likely you have the stop loss in automated bots. But in case of those coins that are unprotected, well, you don't have the stop loss for them, you don't have take profit, then this is the percentage of your portfolio you need to protect. And one way to protect it is by using the short sell bot. Okay, but another way would be just to find those coins that are unprotected and set the stop loss and the take profit for them. Okay, so let's say I have Quantum here, which is unprotected. I know that it's unprotected because you see nothing is in trades, so that means my bot is not trading out Quantum now. It just means that 154 Quantums are not protected. So I would open the chart here and I would say, okay, if it breaks this important support line, then most likely it's gonna fall down to $9.98. So I could set my stop loss around this area, stop loss. So I would just set my stop market. I think, yeah, that's the stop market I would use. Sell, exact price would be 11.59, 100%. You see, that's exactly 154 quantums, and that way if the price falls down to this point, it's gonna automatically trigger my market sell order and it's gonna sell all the quantums. So that way I'm no longer in the market and I can still enter the market back at the lower price level. Okay, so I'm kind of getting out of the market before the plunge. So that's how I would protect my otherwise unprotected coins like Quantum, for example. DYDX the same way. You see, it's a new coin, but I would say if it breaks this $20 support line, then most likely it's gonna fall down to $17. So this is where you can get out of the market at around of 19 or something. But I mean, as of DYDX and Quantum and some other coins, these are the coins that I have in my portfolio for the long-term perspective, and I don't want to be distorted by market turmoil that easily. I mean, I'm indifferent if the price falls 25% even intraday, or if it rises 25% intraday, because these are the coins that I hold for a year or even more, and knowing that it's just the patience that I need to take the most out of this coin, because one day DYDX can cost, let's say, $100, okay, and it really makes sense to wait if I really think it's going to be trading at $100 instead of getting out of the market at every minor price swing down, or taking profit out of the market on every minor price swing up. Okay, so instead sometimes it's better just to hodl the coin. Okay, so if you know those that bought Bitcoin back in 2019 and been holding it until like 2021, I mean, they are the ones who made the most. Okay, not the ones who've been actively trading, but those who've been just holding. Okay, so that's why I think that a certain percentage of your entire portfolio should be allocated in some coins, and you don't touch these coins for a long time. Okay, completely just forget about them for a while. But yeah, anyway, if you still want to have some kind of protection, then that's the way for you to do it. Stop market, for example, or use the short sell bot to hedge against the falling market. Okay, but that's a different level. It's more like a pro level protection. Okay, because here you have to bet on the market to fall, and it actually might not fall. Instead it will go higher, and that way you will lose money here. So it's kind of a double sword game here. So let's see what kind of questions you guys have. So a question: when I close the bot, how can we calculate the exact quote currency sum that we receive back in the exchange account? So let's say I want to close my MKR trade. I go here, click on close, sell at the market price. Okay, so it's gonna sell 0.17 MKR to USDT. So the way I would do it, basically the total value is here. It's $452. You can see the value. I think you can switch to, no, you cannot do this. Boom, boom, boom. Okay, let's go this way and see in USDT. So yeah, that's the current value is 452 USDT, and if you close your bot entirely, that's the quote sum you will get, 452, because that's 8.58 USDT you now have in quote, because that's the one which is allocated to limit buy orders, and the 0.17 MCAR is in sell orders now. So once it sells this plus the USDT you have, in total that's 452. So you get 452. Okay. And yeah, minus the fee you pay for selling this at the market price. Okay. Like for example, if you look at Uni here, I have 12 Uni and 135 USDT. In total that's 464. So if I would want to close this trade with the market sell order, you see, no, where is that? Uni sell, it would sell 12.817 Uni, and that way I would be out from the market with 464.6 USDT minus the fee you pay for the market sell order. Okay, which is around what, 0.08% on Binance fees. Let's see. Yeah, it's 0.075, because if you use BNB as a discount, then that's gonna be this fee you pay. Okay, next question. That I can understand why some people would. Yeah, I can see that you can be confusing, because yeah, it's the bot profit is taken here into account. You see the value, it takes the current balance plus the bot profit, but that's how it works now. Okay, it's just that way. And you've noticed that for the last 8 months we've been improving this whole analytics dashboard considerably, and well, you can say for sure that now it provides you more info. But of course I wouldn't say that's like the ultimate solution. Of course we're gonna take into account your feedback and what are the other metrics to be taken into account to kind of distinguish your investment allocation, let's say bot profit, out from the value calculation, just to see what's the profit generated by the bot and what's the current value in trades. Yeah, I mean, and of course, like things like some bot profit is the value you see fluctuating every day, and I don't know what was the some bot profit yesterday, for example, or a week ago. Okay, that's something we are working on as well, just to monitor your weekly, daily, monthly activity. That's important. I understand. It's just that it really takes time to figure out what are the metrics to be included and where we should display them. Okay, so because we could overload the whole trading experience for you and you would get lost here. So that's why it's a step-by-step process. Okay, but I understand that some of you would want to see some kind of extra metrics. I understand, because on my own, yeah, I also want to see some extra metrics to digest my performance and see what's the let's say what was the last month bot profit compared with 2-month bot profit, and what was the total number of bots I had back then, and the last month, and the current month. So the exchange withdrawals and deposits also to be taken into account, so that it no longer distorts my overall profit or loss. I mean, there are lots of things to be done, and I understand your concerns. So, but as of now, that's the current solution. It tells you more about your bots compared with what you had 6-8 months ago. But step by step, we are improving it. Yeah, so by the way, don't forget about the demo mode, which is like the sandbox for you to play with different strategies, absolutely risk-free, because here you have virtual money, and you use this virtual money to simulate trading on real coins that show you real prices at the real time. It's not lagging behind, it's the real price. And here you can play with different strategies and see which one works for you. And once you figure out your golden strategy, just go on your real account and start trading with your real money. Okay, so that's like the best advice I would give you if you want to learn about automated bots and see what are the optimal configurations depending on your available balance and risk appetite. Just to remind you, if you have okay, let's say you have $1,000 only in crypto, I would recommend you to trade on Huobi or OKX, because on Huobi and OKX requirements for trading are lower, whereas on Binance, for one trade, like for one limit buy or limit sell order, the minimum is usually $10. Okay, and in case of Huobi and OKX, it's lower. So that means that you could launch the same bot on the same currency with the same number of grid levels, the same grid step, but with a lower investment sum because of the requirements on Huobi and OKX. So let's say on Huobi you could launch 3 bots, whereas on Binance with $1,000, let's assume you could only launch 2 bots. Okay, maybe I'm wrong. 5 bots on Huobi and 2 bots on Binance with the same parameters, but just because of the different trading limits, Binance wants you to allocate more money. So it's just how it works. So that's my tip for beginners. Start with Huobi or OKX if you have balance lower than $1,000. And of course, you could always use different exchanges even if you have a bigger balance. Like in my case, for example, that's $37,000, and notice that I have exchanges like let's say as bot, Binance, Huobi, and OKX. So on Huobi, sometimes you can have coins on Huobi that are not available on Binance. That may be the case why you would use Huobi. Or maybe you want to allocate only $500, let's say with 65 grid levels. In that case, you see the requirements on Huobi would be lower than if you would want to trade Matic on Binance, for example. That would be also the case for you. Another tip is that you can have multiple strategies trading one, like pretty much the same trading pair, except for the fact that the stable coin is going to be different. So you know that right now I have Bitcoin trading to USDC, and that means that I cannot start another bot on the same trading pair. But the way for me to get out of this trap is by just trading USDT instead. It's pretty much the same, okay? Or maybe TUSD. That's another stable coin you can use. So that way you kind of overcome this obstacle here, and that way you can simultaneously launch different strategies but on the same trading pair pretty much, and see which one will bring you the most. You can do this on the demo mode as well. Okay, so let's say you want to have as a bot on Matic with this trading range, but on the first strategy you want to have 100 grid levels, on the second strategy you want to have 50 grid levels, and on the third strategy you want to have 20 grid levels. So the way for you to do it is to launch the one with 100 grid levels on USDT, the one with 50 grid levels on Matic to, I think, BUSD. No, it's not Matic, BUSD. Yes, here we go. And the third one with 20 grid levels, maybe in that case not as bot but the classic bot, you can launch on Matic to USD maybe? No. USDC? Nope. Okay, what's the, it's only USDT and BUSD. Okay, so there are only two stable coins for Matic, so that way you can have only two two strategies simultaneously. Please zoom in your browser window. Okay, here we go. The reason why I usually zoom it out just because I have 14 active strategies and I want to see all of them, and that's why I usually zoom out the chart. Okay, so Anthony is writing, I have tried to mirror demo and real. They are not the same. Well, of course they're not the same because there's a psychological side of this story. Because usually when you are trading with your real money, that's a different level, because you know that your risk is your real money. And sometimes it can lead to stupid actions. Sometimes it can lead to actions like you sell coin too early, or you sell coin at a loss too late, okay? Which in that case will bring you different results compared with the demo trade, where you trade with virtual money. You know that's just virtual money, you lose nothing pretty much. But yeah, so far that's the closest sandbox to the battleground you can have on crypto, and that's like the best solution you can have as of today to kind of simulate real trading and at the same time still get some experience out of it, and that way to prepare yourself for the real market where you have real money as a risk. And yeah, but you don't have this 100% perfect simulation. It's because of the psychological side of this whole narrative, which is only at its full capacity when you trade your real money, because in that case your greediness, your anxiety, it's at its highest capacity when it comes to real trading compared with the demo mode. But demo mode is like the closest sandbox you can have. So how strict are you about sticking to 0.8 to 1.5 grid step? I would say with 70% of my of an accuracy. So you can still see some coins that have a different trading range. So maybe let me zoom it out. Yep, like this. Let's check SNX, for example. So for SNX, that's 2%, slightly above. Here is okay. 1 inch is in the range. Yeah, OXT is out of the range, it's 3%. MKR is in the range. So yeah, that's, I would say 4 or 5 strategies out of 14 strategies are out of this scope of my grid step range. But that's because for 0x, Bitcoin and Litecoin, I used completely different setup because I just wanted to buy the dip, and that's why I have 4% in grid step here, which something you can also do. Okay, if you just want to use the board just to buy the dip, let's open any random coin, let it be AVA USDT. Let's say you feel like it's gonna plunge heavily and you want, in that case, have 30 grid levels, extend your trading range like this, and here we go, only buy orders, and that's your trading range, 5%. So if it falls, boom, and then starts to trade here, it's gonna maintain this 5% of the grid step. But with this level of with this kind of configuration, you can buy the dip, and for buying the dip I usually stick with 5% as a grid step. That's something you can see for my Bitcoin, it's around, well, 4%, 0x that's 5%, and Litecoin it's 4%. So it's really up to you. Okay, it's just that I won't give you the golden strategy because it does not exist. It's just that you can find your golden strategy for a certain period of time. Like maybe it's gonna be your golden strategy for 4 months, but in 4 months market conditions gonna change. You might now want to flip to new coins instead, and you would need to consider new parameters for those coins that have different volatility, and well, that way you would need to kind of tweak your golden strategy again, experiment with it for the next 2 months and see if it's really now your next golden strategy. Yeah, so that's pretty much it for today. What we wanted to cover is how you can protect your portfolio by diversifying it, first of all, with automated bots, with smart trading where you can manually trade, and also with simple hodl strategy. And even if you hodl something, you can still protect these coins with instruments like stop loss, take profit. So everything is here at your disposal. You have all necessary tools for you to protect your portfolio. Essentially, stop loss is your the best solution. That's like the essential risk management tool, but you can use other things as well that we have. And yeah, don't forget about demo mode, where you can play with different strategies in a risk-free mode. Don't forget about the Combobot, which you can use for speculation with leverage, and also as a hedging instrument against the falling market to protect your portfolio, which is not protected. And do not forget to use other tools, not just ordinary indicators, but also some on-chain analytics like this one and this one, to really see what's the current what's the current state of network. It's strengthening or it's weakening. So this is something you can get from the on-chain data to see what's the current sentiment on the market, the fear index, and what's the current inflow of institutional money, outflow of retail traders, and what's the current over leveraged capacity. And well, there are many patterns to be taken into account on chain. So I recommend you to add this on chain element of research to your overall fundamental analysis, and that way you will understand the market better, because it's different from the traditional market. We have completely different metrics to be taken here into account, so you need to take all of them. So yeah, thanks for your attention. I never take it for granted, and I really hope you guys gonna leave some feedback. And if you want to see some new improvements on Bitsgap, let's say some new features, new bots, I don't know, better analytics, then just write it down, explain what exactly you want, how you want it, how you see it, and that way it's gonna be easier for us to kind of consider it and see if it's a viable solution or not. That's something we did with the trailing down, because many of you wanted to see trailing down, and we made it for you. Okay, so speak up and some magic will happen. Okay, we are an open community, and that means that we want you to tell us what you want, and that way we can really consider the best features for you to further maximize the returns and to minimize the loss you can have on this cryptocurrency highly volatile market as of today still. So yeah, it was me, Dmitri. Thanks for your attention once again, and I wish you profitable trading, and see you next week.